Well, welcome everyone to the back by popular demand, the Pandemic Survival Guide for Residential Contractors. So it's been a little while since David and Paul and I have been with you, and we missed it. So
we're having fun, right, Ed?
You're right. Exactly. So yep. So we decided it was time to get the band back together and bring back the Pandemic Survival Guide for Residential Contractors. So
this is called a reunion tour, Ed.
Yeah.
That's it.
Okay.
Right.
I hear something
Exactly.
and you need to mute them, David.
Well, that might be Anthony speaking to his lender. So
Yeah.
So I'm good
probably.
now.
okay.
Okay. Good. All right. Well, for those of you that don't know who the three of us are, we'll do a quick introduction. My name is Ed Earl. I am one of the principals with Residential Contractor Services Group, along with the two gentlemen I have with me. I'm coming to you from San Diego, where I run a construction project management company as an owner's rep, consulting homeowners that are building custom homes. And I've also a business coach with these two gentlemen. I have about 30 years of experience in construction and also have an MBA from Stanford. So I'm going to turn it over to Paul.
Well, I've been doing this for 35 years. This makes me an old guy, right? Working with companies between $1 million and probably 50 million. And as I can say, I've never had this happen. This whole pandemic, this quote, new normal sucks. What can I say? But we have to work with it. It's got some good news and some bad news, but it's doing okay. And we're actually had the best, a lot of our clients have had the best year ever. So I guess it does have an upside.
Shall I pick it up?
Yeah, your turn.
Yes, David.
All right. So David Lutberger, and former building contractor, work with both Paul and Ed, and just have gotten into the, well, not just, but 10 or 12 years ago, got into the coaching, and then recently added some information on assisting contractors. Because you look at the three of us, guess what? We've got white hair or no hair, and beginning to assist contractors with potentially transitioning. So the three of us have a nice synergy. And so we did these pandemic webinars back in the spring. And Paul, what you just said is true. Contractors not just had a great year, sometimes the best year in the last 20 years. So this has opened up some great opportunities. Let me give it back to you, Ed, because there's a reason people are here to hear about this second round.
Right. And I would ask Jonathan, since you're on, could you turn your camera off for a while? You've got your camera on.
That's you, Jonathan.
Jonathan Scholl. He's actually going to be up next. So we're actually going to start. We're going to start with Jonathan. So you can stay on there, Jonathan. So just let me do a little quick introduction. Obviously, we're all here to learn about the PPP program for the second round. Probably many of you here that are on the webinar, including many of our clients, had great success with getting the PPP and the EIDL funding in the first round. But now we've got this second round opportunity. And we have also seen a lot of success with several of our clients who have already not only applied for the second round of the PPP, but gotten funded. And so we wanted to start off this webinar with a couple of success stories. And so let's start with, well, and Jonathan, since you're here, let's go ahead and I'm going to start with Jonathan. Jonathan is one of our clients. Jonathan, can you share with us what your experience has been with applying and receiving your PPP loan?
I'm not sure Jonathan's.
John, is it? Yeah. It looks like the screen might be frozen.
Oh, he may be frozen. Yeah.
Oh,
there he is. Audio. Now he's back.
I don't think he has. We're gonna have to move on.
And here. All right. Let's try. How about Anthony? I know you're here, Anthony. Why don't you go ahead and share your experience?
How are you guys?
Good.
Well, the first round went very smoothly. I decided to go with I bank normally with a smaller bank locally here in upstate New York. So I decided to go that route, being that I had a personal contact at the local branch that was going to be handling the process and any questions that may have arose during the process. So When the first round came out in April, I submitted everything that I was able to obtain from either my accountant, and nicely, Paychex provides you really a link to an automatically formatted spreadsheet that you would be handing in to the SBA. So between having that from our payroll company and obtaining 941s and whatever else we may need from our accountant, it was a fairly simple process. Now, when the second round came out, a lot of the companies and or banks came up with these online portals, which they were having people load their information into and then getting basically in line. And that's what the bank up here did, KeyBank. They're really located all throughout the Northeast. And I just submitted everything in, really just the 941s, again, the same spreadsheet that Paychex provided as a link in our online portal. And everything went fairly quick. Within a few days, everything was reviewed and approved and then funded a few days after that. So I think the whole process was maybe 7 to 10 days.
How much did you apply for, by the way, Anthony?
The first round was just under 30,000. And then the second round actually was higher because I did take on some people this year. And what they did is with this round, they had you show a quarter where you had, 25% less gross revenue. So that's what I did. We had a quarter where we were able to show that, but we did actually take on some employees this year. So when Paychex spit out that new spreadsheet or breakdown of my payroll liabilities, it was actually higher. So I got, I think 40, I think it was like mid 40s.
And for our listeners, you had a great year this year, right? All in.
Phenomenal year. Yeah, I mean,
the best year ever. So
yeah,
this guy had the best year ever. He had a bad quarter and got funded more than he got last time within 7 days.
Even better. What, 10 days, Anthony? Took you about 10 days?
Yeah, I'd say it was about 10 days. And
Yeah.
you know, as being in this industry, you can have a phenomenal year, but you can still usually be able to show a quarter where you didn't do as good as the previous year because
Right.
we rely on house closings. So, not that it's a fault of the PPP or the SBA, but I mean, look, it's not like we didn't fall within hardships. I mean, we were shut down in New York State from doing any construction for 75 days almost. We went all through April and May. End of March, we were shut down, I think, March 20th, to only allowing to have one person on a job site. One. Which
Right.
we all know that's nearly impossible to get anything done on a new construction site. And then we weren't given the green light until middle to end of May. And even then we still had some regulations to follow. So we had projects sitting, foundations in the ground, houses framed. I had one home that was almost done. It was pretty much done, and I couldn't get the city to come and do a certificate of occupancy inspection. So you have all that money out there. And, you know, so between that and then what we're dealing with even today with lumber and building materials, we had contracts signed. We didn't have a provision in there. None of us had a crystal ball to see that, you know, if lumber prices skyrocketed the way they were, we can raise our prices or raise the contract price. So, you know, we took it on the chin there, and on top of that, all the extra carrying costs that we had to endure the first and second quarter of this year. So
Anthony,
it helped to be able to get it for sure.
Somebody who could fund any of the people at our webinar, even if they're not a member of that bank.
Yeah. So
process, and then they can get in touch with us to find out the specifics, because you
Yeah,
just
so-
thumbnail
Right.
sketch.
So, I mean, I went with the bank that I went with just because they were smaller and like I said, they had a little bit more of a personal touch rather than like a Chase or a Bank of America where you're a dime of a dozen. Let's face it, there's really no personal touch when you're banking with those monsters. So the reason why I went with them is because of that. Now, I do have a close friend of mine that owns Prime Commercial Lending. And I just forwarded both Dave and Paul the link to his online portal for the PPP. You guys go to that link and you're gonna create a login, and you're going to submit your information there. He's got a call center of like over 300 people. He does commercial lending for people all over the country. So he actually was approached by a lot of these banks that were having a hard time processing PPP loans and didn't have the manpower to really keep up with the demand. So he's doing it for banks even. He's processing for banks. So I would go to that link. Whoever's interested, email Paul or David, and he said feel free to share his link. You guys can go in there. He'll get everything processed for you. He's like I said, he's got a call center. So if there's any questions, and they'll jump on it right away for you guys and start trying to get these people who are having a difficult time funded. And on top of it, he does a lot of other types of short-term loans, meaning equipment or capital for projects and stuff like that.
Good. Okay, so Anthony, thanks a lot. I think from the case of time, we need to move on to Matt. I think Jonathan's sound doesn't look like it's working yet, as far as I can tell.
Yeah, but Matt's with us here. Matt from Montana. Let's see if we can unmute him here.
Thank you, Anthony.
Oh, he's self.
Right. No
Thank
problem.
you, Anthony. Let's see, Matt. It looks like you are self-muted. So if you can unmute yourself. And is muted by an organizer. Can you unmute him, David?
Let's see here. It's what's his last name?
Matt Madden. He's under staff. And Jonathan, Jonathan, we can see you, but we can't hear you. I don't know what is going on with Jonathan. And Matt is still muted.
I'm clicking on unmute. Yeah. It won't unmute, Ed.
And it's not unmuting him. All right, let's go to Heather. We know that you're here, Heather. Heather, can you hear us?
I can hear you. Can you hear me?
Yep.
Yes.
Okay.
Okay, Heather, let's hear your story.
Okay, so we applied for the PPP round 2. The portal actually opened for us on New Year's Eve. The bank that we deal with is, like Anthony, a smaller bank that we had a personal account with. So we decided to go with them for the first round and then just continued with them for the second round. So what our bank required was a lot of the same stuff that we required for round 1 that I submitted for approval and forgiveness in round 1. So it was just keeping up on the 941s that were filed, the number of employees, our rate of rent or mortgage or utilities. And our bank was kind enough to send out an email probably about a week or so prior saying the portal is going to be open. This is what you're going to need to submit. So I got right on that and had a file on my computer ready to go. So New Year's Eve, when it opened at 2 p.m., I uploaded everything, signed everything, and it was ready to go. They had a couple technical difficulties where they kept sending the application back, but that was on their side, not our side, because everything was filled out correctly. And then we were able to get approved and have it funded within, I think they took a little longer for us. We took 30 days to get it. but we were able to get about $50,000 more than we were able to get on PPP round one.
So how much did you get total, Heather?
The first round we got 130,000, and the second round we got 172,000.
Okay, and how has your year been this year, Heather? Has it been a good year for you, all in?
We had to do the same thing of showing a loss of 25% for 1 quarter of the year or the year overall. So we were able to show a loss for the 4th quarter. So I would say some of the projects moved a little slower than we would have originally desired for. We weren't shut down as long as, New York or a couple other states were shut down for, and we were able to have a reduction in staff on site. But all in all, I think it was a decent year, not as well as we would have all hoped for. But given the circumstances, I think we did pretty well for ourselves.
Great. Okay. Is Matt available yet?
Matt still seems to be muted, and I don't know what's going on with that. It seems to be self-muted, and I'm texting him, but he hasn't been able to unmute himself. So,
yeah, well, let's see. Matt's. Wait, I think we can hear him now. He's got green on his mic. Matt, can you hear us?
All right.
I can hear you guys.
Yay, you're on.
We can hear you.
Thanks, Heather. I really appreciate it. That was awesome. So, Matt, you're on. The next testimonial.
Okay, I did 2 rounds of PPE. I did it last year in 2020, and then did it again this. I started the process January 27th, and I used a small local bank. I sent my banker an email. He sent me a link to the application, and it was as simple as going back to the original application and transferring the numbers into the new application for 2021. And the only difference that I had to show was that our P&L for 19 to show the quarters of the first quarter of, I'm sorry, we did the second quarter. So the second quarter of 19 versus the second quarter of 2020 were off by 25% or more, which we did. And so we submitted our profit and loss reports to the bank as backup of that information. And less than 2 weeks later, we were funded $45,000.
So you got funded for the same quarter twice, like most people out there can do, right? In a sense, because we all got funded because we had a bad second quarter, but they didn't ask for the 25% down. They just funded people. And this time they're funding you again for the same bad quarter you had last year, which is awesome. So it's all good.
That's right.
You've had a good year or a bad year. How's your year been all in?
Last year was not a good year. It was nothing. It was a bad year. We were lucky to be funded, and we're looking forward to this year as well.
Cool. Okay. So Ed, you're on.
All right. Yep. Jonathan just doesn't look like we can make it work, but that's great. You heard firsthand from 3 of our clients. Quick math, it was over, I think, close to $250,000 between the 3 of them. A couple of things that I want to point out. One is, as you can tell, the process is much simpler and much faster in this second round. And the second is that you can apply for more than what you got in the first round. So another thing that I want to bring up is that right now the smaller banks are much more available for this second round of PPP. One of the criticisms of the first round was that all the big banks went out to their biggest clients and they used up all of the money. And so this time the SBA specifically released it to the smaller banks. These are just 2 of the many emails that I've gotten of banks soliciting me to sign up and register for the second round. So let me give you a little bit of background here. The second round of the PPP is a result of the CARES Act 2, which was signed into law in December of 2020. And as part of that, it was a $900 billion COVID relief bill. This isn't the current one that Biden is trying to pass. This was back in December with the previous administration. So for the PPP program, that was $284 billion was set aside for the PPP program, second round. As of last week, as of February 7th, $101 billion of that 284 had already been approved. So that was $1.3 million worth of loans. But the good news is that unlike the first round where they actually ran out of money, there still is $183 billion worth of funding left. So that's great. A couple of other changes here in the second round of the PPP. It has a 5-year maturity instead of a 2-year, although that really shouldn't matter because hopefully you're getting it all forgiven anyway. Another change is that the borrower has 10 months to apply for forgiveness. In the past, it was originally 4 and then 6 months. And so that gives you more time to apply for forgiveness. This next one is really key. In this CARES Act 2, it reconfirmed that the PPP funds are not required to be claimed as taxable. So any PPP funding that you get is non-taxable income. And also importantly, any expenses that you paid with those proceeds is also still tax deductible. So at one time there was a discussion that any of the payroll expenses that got paid and funded from the PPP, you couldn't write off as an expense. But in the CARES Act 2 in December, they clarified that all of that is still tax deductible. So that's huge. So that really truly means that this money is free money because they are not getting you back on that. So let me go through the general criteria here for the PPP loans. It's available starting on January 11th, and it's only through March 31st. So we have only about 5 or 6 weeks left. You have to have less than 500 employees. Generally the same rules as last year. The second-time borrowers, and that's also, I want to make it clear that if you are on this and you didn't apply in the first round, you can still apply in the first round. So both the first round and the second round deadline in both cases is March 31st. So the second round came in online on January 13th. The key thing here is this, that you must have suffered, I don't know if I like that wording, but you had to have a 25% or greater revenue decline in comparable quarters from 2020 versus 2019. Or if you want, you can also use the entire annual number for 2020 versus 2019. But given that they're mostly contractors on this webinar, I'm sure that probably almost all of you had a better 2020 than you did 2019. The loan is 2.5 times of your payroll expenses. There is also a provision that for 3.5 times for certain businesses, but those businesses are restaurants, lodging, hotels, and so obviously that doesn't apply to us in the residential construction industry. So it's 2.5 times your monthly payroll expense. And as you heard from some of our participants, such as Heather, you can use a different number than what you used before, and that's how you can get more funding. The last thing I want to say is that you also have to have used, if you're applying for the second round, you have to have used all of your first PPP loan funds for allowable expenses. Now, this is where things get a little tricky because you don't have to have applied for forgiveness for loan for your first round in order to get the second round. So there's really no way that they can know whether you use the first round of PPP for allowable expenses if you haven't yet forgiven the money. So it's kind of more of a trust thing that they're just, trusting that you're going to certify and say that you did use the first round for the allowable PPP expenses.
A quick question, Ed.
Okay. Yes.
If 2020 was better than 2019, is there still room for approval for another round of funding? And we get back to that quarter evaluation.
Correct. And so that's the crux of the issue there, David, is your 2020 as a whole could be better than your 2019 as a whole. However, to qualify, you have to have 1 quarter of 2020 where you can show and document that you had a 25% reduction. For most people, it was the second quarter, April, May, and June.
I have a question.
Yes.
We have an accounting person on the line. Maybe she can answer it too. Diane, is this going to be accrual or cash? And can you go back and forth between the two, or does that matter?
I would make a broad assumption that you can't flip back and forth. I mean, you have to be consistent.
Okay.
Regardless of whether you use accrual or cash.
Right. So if you're on cash, you stay on cash. If you're on accrual, you're on accrual. But it has to be one quarter. Now, another question I have for you, Ed, does that quarter have to be like first, second, third, or fourth quarter, or it can be like a split as long as it's 3 months?
That is a great question, Paul, and one to which I couldn't find an answer. I was on a webinar last week, PPP, and there was a couple of experts supposedly, and I asked that question, and it stumped everyone. So the best that I can find is that it really depends on the bank. I'm going to show you in a couple of slides here, Heather's Bank, their form that they used. And in that case, it's specifically for calendar quarters. January, February, March is quarter one, April, May, and June, quarter two. However, I've also been told that some banks may allow you to use any 3 contiguous months, because for some of you, probably your lowest months were March, April, and May. For some of you, you might have recovered by June, and you may not be 25% below for that second quarter. But if you could use the 3 months of March, April, and May, you can hit that 25% mark. So let me also just introduce Diane Gilson. You heard that voice here a minute ago. Diane Gilson is actually the accountant consultant for Heather's company. Diane, do you want to just give a quick background on the services that your firm provides?
Yeah. Hi, Ed. Thanks. We actually help people set up their internal management accounting systems and their job costing systems so that they can see which jobs are making money, which jobs are losing money, and that lets them know how they can roll forward and do something about that and position themselves so they can use the information to be a whole lot more profitable in their companies. So getting that underlying structure set up properly in QuickBooks is really key. And there are all sorts of different levels of QuickBooks. So being able to quickly run a report, just like you were talking about these quarterly reports, you can go in and say, gosh, I want to see my information by quarter. I want to be able to compare it against the prior year. I want to be able to see the percentage difference. And that's all just pretty much the push of a button. Might take somebody 45 seconds to a minute to set that up, if that. So.
Now, question, Diane. You have a lot of contractor clients. How many have gotten the second round of funding?
I work on a project based, Paul. We don't do ongoing bookkeeping, so it'd be tough for me to sit down and say exactly. I haven't gone out and done a poll, so I'd say that so many people are going to be able to get that round 2 funding. So all they have to do is run the reports and see, see where they are.
Well, so far it's 1.3 million, so that's a good number, right? Got
right.
Yep.
Yeah. Thanks, Diane. If any of you are interested in learning more about Diane's services, just reach out to us and we'd be happy to put you in touch with Diane. So a couple of other points of good news here about round 2 and why it's easier. SBA has really streamlined the application process. And as you heard from some of our case studies at the beginning, if you're using the same bank that you used for the first round, it's really simple. And you don't have to resubmit all of the documentation because they already have all of that online. The other thing that's important to know too is that you don't have to have filed your round 1 PPP forgiveness application in order to file for round 2. Okay, so let's move on here. Hold on here, having technical difficulties.
Now, Ed, I have a question real quickly.
Yeah.
What if my last loan was through Chase or Bank of America? And
yes,
I'm trying and they're being difficult. So
great question. We had that situation yesterday. One of our clients is with Wells Fargo, and it's crazy. Wells Fargo hasn't even started accepting loan forgiveness applications for the first round. They're that far behind. So in that case, I would really encourage you, if you got your funding from Chase or Wells or B of A the first round, you're much better off going with a smaller bank. You are going to have to resubmit all of your information because you aren't going with the same bank. But I would say if you're not getting a quick response from one of the national banks that you bank with, I would try to find a local or regional bank and apply through them.
Well, I can even say that Chase is not yet accepting forgiveness applications. That's where I got it from.
So there you go. Yeah, so Chase is in the same instance as Wells Fargo. And you look, the SBA really realized that. That was part of the criticism from the first round. And so they really have tried to target those smaller lenders. The other thing the SBA has done is they've turned a lot of this discretionary approvals over to your lender. So this was a slide that I took actually from the SBA, and it says specifically, work directly with your banker. So this is the form that's used. Most banks have kind of an online version of it, but it is, as you can tell, a much simpler, basically one-page form now that is what you use to apply. So a little bit more good news. Just last week on February 10th, the SBA announced changes to reduce delays in the PPP approval process. I was talking to one of my clients this morning who applied for 3 of his companies. 2 of his 3 were initially rejected. And so the stats from this article said that actually 30% of PPP applications were being rejected by SBA's they call it their E-Tran system. It's their electronic approval process. And so to address that, the SBA cut out this E-Tran qualification that was knocking all these people out. And instead, they're allowing the lenders to directly certify the eligibility of the borrowers. And that's for both the first round PPP and the second round. So, and also they're not requiring the lenders to submit the supporting documentation of the borrowers until they actually apply for forgiveness. So before, the lender had to get all your information and submit it to the SBA to get approved for the funding. Now the SBA is actually funding now and asking questions later. So the bank doesn't have to submit that documentation until after that.
Ed, is the first PPP, if we got money on that one, is that going to be taxable or not? Have they made that decision?
No, it's not. That was part of the CARES Act 2 in December, was qualifying that the first round PPP is the funds themselves are non-taxable, and any expenses that were paid for with those funds are still tax deductible. So that was big.
I have a quick question from Mark. Quick question,
yes.
And Mark commenting that in PayPal he got funded in 4 days. Today, he said it's been 4 weeks since he submitted a PayPal application. He's asking, is anybody else having issues with PayPal?
Yeah. So let's see. I think, Mark, the issue here is that, although PayPal is not a Chase or a B of A, they're still considered kind of a national finance institution. And I just think that they are moving much more slowly. As many of you know, PayPal did a lot of funding in the first round, and I think that's partly why these national banks are working much more slowly on the second round. So, all right, so let me answer the 3 main questions that probably most of you have, which is 1, how much can I apply for? 2, how do I know if I qualify? And 3, will my PPP loan be forgiven? So let's start with how much you can apply for. As I said before, the borrowers can elect to calculate the second round based on 2.5 times the average monthly payroll during any monthly period ending prior to the date of your loan. So you don't have to use that same monthly payroll that you used in the first round. So for some of you, like in Heather's case that hired people, they actually were able to use a higher average monthly payroll for the second one.
So what you're saying, Ed, is if I had a bad quarter and didn't have many employees, but then things picked up and I hire a bunch more employees, I can use my most expensive quarter to get funded and my most expensive quarter to determine the amount, and my worst quarter to determine whether to get funded or not.
Perfect. Yes, you're exactly right. You're exactly right. Those 2 quarters do not have to be the same quarters. Right. Yeah.
Oh, good.
because actually you're not even using the quarter, you're using the month. And it actually even gets better than that. In this second round, they're actually allowing for added payroll expenses that weren't included in the first round. And that includes group life insurance, dental, vision, disability. So any kind of insurance expenses, you can now include that in your average monthly payroll expense that you couldn't in the first round. So that's really terrific.
What you're saying is, let's say I'm using my worst quarter, which is, March, April, May or something, right?
Right. April, May, June.
April, May, June. And I hired a bunch of people and my payroll, everything is doubled in December. It's way higher. I'm having a killer December, right?
Right.
I could possibly get twice as much money as I got last year because my expenses have gone way up for December. It was December of this year, and my quarter was the second quarter of last year, right?
Right. Exactly right. Yeah. So you use the second quarter to qualify for the 25% reduction, but you use the month of December to quantify your average monthly payroll. Yeah. So.
Good.
All right. Well, how do I know if I qualify? Again, we've kind of answered this before, which is that your business has to experience a 25% reduction in quarterly gross receipts. So that's when compared against the same quarter of 2019 or either the entire year. The entities or individuals that are eligible for the second PPP loan of under 150,000, as I said before, they're not required to provide documentation actually showing that revenue reduction at the time of application. You can wait, you can apply until you apply for the loan forgiveness. So you obviously want to run those numbers in advance, but you are going to have to certify that you meet the qualifications, but you actually won't have to submit that documentation documenting that 25% reduction until you actually submit for your forgiveness.
Even if you're not sure, Ed, my thought would be, worst case, it becomes a loan, right? Which is a cheap loan.
Yeah, right. Right. Yeah, exactly.
If it becomes a loan,
Okay.
What's the interest on that loan?
It is, I believe it's 3%. I can't remember if I had that in my, whoops, hold on here. Having some technical difficulties here with my window.
The last time I looked, I think it was 1%.
Holy smokes.
1%? Okay, great, thanks.
So worst case scenario is you get a 1% loan. Right.
Right,
Really?
So if you need the money, you might apply even though you don't qualify because you get a 1% loan, right?
right, yep.
Now, I'm going to ask Diane a question. If I apply and I don't make it, is there any kind of penalties or something that because I heard some, rumors that I can get penalized if I really didn't deserve the money and I took it anyway. Is that true or not, Diane? Do you know?
Again, I'm not the PPP expert. However, my guess would be that really what you're worrying about here are fraudulent applications, people that are going through and certifying. I mean, there are mistakes in accounting and mistakes in things that you do, but there's also something called fraud. Okay. And so
Right.
you're really certifying in a best faith scenario as to what you're applying for.
So if I applied for the money, but I don't make it, I go, oh, I guess I made a mistake. I thought I would qualify, but I didn't. It just turns into a 1% loan, right?
I would think that would be the case, unless, again, there's reason for you to be prosecuted for doing something fraudulent. So, make sure that you're working in a good faith environment and that you have the numbers to back up what you're doing.
Okay.
Right. And so Paul, and to clarify too, the reason that you would not qualify for forgiveness is not because you didn't show the 25% reduction. You have to show that regardless. The reason that you would not qualify for forgiveness is if you use the money for things outside of the payroll. And I'm going to get to that in a minute. So let me just again say, with calculating the 25% reduction, if you were in operation for all of 2019, you can use the annual receipts. If you were not in operation for all of 2019, then you have to do the quarters. Again, there's the question that Paul asked, which is, can you use any 3 continuous months? We don't really know. It seems to be that it depends on the bank's interpretation. This is Greenfield Savings Bank. This is who Heather banks with. You can see from their form that they're very specific, and it shows that it's January, February, and March, or it's April, May, and June. You have to fill in one of these shaded quadrants here. So I also spoke with someone else who filled theirs out. Their bank actually had it online, and you could not pick any 3 months. You had to, it only let you fill it in based on which quarter that it was. So, all right, will my loan be forgiven? Okay, this is where I was talking about with what you were saying, Paul. So 60% of your loan must be used for payroll, and the remainder can be used for other expenses, including monthly rent. So, and again, the payroll expense has been expanded now to include lots of different insurance, including group life, dental, vision, and disability insurance. So, but that's the key to being whether it's forgiven or not. So the 25% reduction is what's required to get the money. So you can't say that you had a 25% reduction and then not have that and just say, well, I just won't have it forgiven. Then technically you are not allowed to get that money. I don't know if they would have you pay it back. I'm not clear on what they would do with that. But my advice would be, if you can't demonstrate a 25% reduction, then you shouldn't apply. If you can, then go ahead and apply. If you want to use the money in other ways besides 60% of it on loan amounts, then you could not have it forgiven. Let's see. Also, there is this certification as well. This is where it kind of goes to Diane's point as well, and this is where it's somewhat of a judgment call. You have to certify that the uncertainty of current economic conditions makes necessary the loan request to support ongoing operations. And this is where it's really a gray area. You know, I think no matter how good of a year you had in 2020, you were still impacted by the pandemic. And the fact is that we're not out of this yet. You know, we don't know what's going to happen here as we go into 2021. So, you know, I've had some of my clients say, look, I'm getting this as an insurance policy because I don't know. Yeah, I was impacted last year. I'm probably going to be impacted again this year. So I think, you know, unless you were just doing absolute gangbusters and never really saw any decrease, I think most people could certify that they experience some kind of uncertainty economically. So, okay, again, here's your 60-40 split. So 60% must be spent on payroll expenses. Those include not only gross payroll wages, but it's commissions and bonuses, payroll taxes, healthcare premiums, union benefits, hiring expenses. Now, this is interesting. Your recruiting fees also can be included in your payroll costs. So for those of you that are listening that are currently using Contractor Staffing Source, you can actually include those recruiting fees into the 60% of the payroll expenses. So that's something I think, Paul, we want to keep in mind and let our recruiting people know that. Then the other 40% can be used for rent payments, prepayments, mortgage interest, equipment loans, and any kinds of utilities, gas, electricity, phone. For those of you in Texas, if you still have electricity or water, you can use it for that as well.
Now about a quick question.
Okay, how is the PPP?
Quick question. So the funds above 60%, Kurt is asking if it can be used for a capital purchase, such as a vehicle.
No.
Okay.
And
that is not.
I'd like to make a comment too. One of my clients who does like 20 million got funded for another 200,000 this year. And what happened was, it wasn't that they couldn't do it. The permits got so slowed down where he was because of the whole pandemic thing. That's what killed his business, was he couldn't get permits on the work he was doing. So it stalled everything. And that's a direct result of the pandemic.
Right.
And that's why it's such a bad quarter. And that certainly qualifies because that's pandemic related. You can't get permits.
Absolutely. Yep. That's a perfect example. Yep.
Keep going, Ed.
Okay. So how is the forgiveness measured? So again, the forgiveness is 2 factors here. The one is that you have to have spent 60% on the payroll. The second is that you haven't had more than a 25% reduction in employees. So if you've decreased your head count for February through June compared to February through June of 2019. So if you've had a reduction in your payroll by more than 25%, then your loan is not forgiven. So, all right. So for those of you that want more information, there's a couple of places that I would suggest you go. The first one is here on the SBA where they have these, I love it, they call it the interim final rule. So, when you click on this, if you just actually even just do SBA Gov PPP interim final rule, it'll take you to this page. And then you can click on this button here and you can download the PDF of the interim final rules that are effective as of January 19th. In regards to the PPP loan forgiveness, you can also go to this page and they've got all of the different information about the first draw PPP loan forgiveness terms and the second draw PPP loan forgiveness terms. So, all right, just a couple of last final thoughts and recommendations. If you haven't applied yet, don't wait. If after this, listening to this webinar, you feel that you do qualify, you can demonstrate the 25% reduction, apply. The deadline is March 31st. It looks like they'll have enough money to carry us through to then, but you don't know for sure. The second is that your banking relationship is the most important outside factor to not only maximize the forgiveness, but also to process this loan. So use the local bank relationships that you have. Even if you had the first round with one of the larger banks, I would encourage you to find a local or regional bank and apply with that. The next thing is document. As I'm sure Diane would agree, you've got to make sure that you have all of your documentation together and that you have all that ready to document for your forgiveness. Next point is to remember that forgiven portion of your loan is not taxed for federal income tax purposes. I've heard that some of the states might still be taxing that, so you have to kind of check with your local state taxes, but they are definitely not taxable for federal purposes, and the funds that you are using are still deductible as well. So the rules are changing as we go along, so you just have to kind of stay dialed into that. And the last thing I want to mention too is that many local states and counties and cities are also offering their own COVID relief, and so that's something that you want to keep in mind as well, as there are other sources of funding out there as well.
Ed, I would like to add something to this question thing. A lot of people may not want to share in a public forum some of the sort of intimate questions about their business, right? Like we all want to keep privacy. So we'll probably be contacting everybody that went to this webinar who's not a client and offering them like an hour with us to discuss their own personal things, because it's very personal and it depends on your finances, depends on a lot of things. So we'll be giving you a call and find out if you're interested in, an hour personal consultation on whether you should apply or not, or if you got to apply, how to get it forgiven. And Jennifer will probably do. She's our marketing person.
Right. Okay. David, any other questions from the participants that we can answer?
Just a comment from Diane, and she said supplier costs are especially uncertain within the construction industry. So if you're taking these additional expenses, again, it's a very specific accounting question. Is it deductible? I don't have an answer. Either does she.
Well, It's not so much, okay, I'm going to jump in. It's not so much, it's addressing the uncertainty issue that Ed brought up, as to what's 2021 going to look like. And so because of these far-ranging changes in supplier costs in steel, in lumber, and so on, that's going to set you up for a lot of uncertainty in 2021. So I don't think you have to really do too much to justify that concept of what's 2021 going to look like for everybody.
It's going to be more expensive.
Exactly.
Thank you, Diane.
All right, David, I'm looking in the questions box, which is different than the chat box, and it looks like Mark has a couple of questions. Did we answer those? Oh, that was the PayPal. Oh, Mark was the one with the PayPal. Oh, okay,
Yes.
got it.
Yes.
Got it. Okay. All right. Well, before we go, I'm just going to one more time put our contact information up here. If you have any questions, not only about the PPP Round 2 funding, but anything related to the construction industry, David, Paul, and I would be happy to give any of our listeners here today a complimentary consultation session, share with some of the advice and experience that we've learned. As it says here, we have between the three of us over 95 years of experience in the residential construction industry. So we'd be happy to help out in any way you can. We realize that these are challenging times and with lots of different moving pieces, and we'd be happy to help you and your business in any way to not only survive the pandemic, but to, as many of our clients have, actually thrive during these challenging times.
Right. And I was saying, since we did this once, we may get back to doing these once a month, because things change, right? I mean, it's a really different world out there. I think we can ask for some help.
Right. Yep.
Thank you, everybody. We had 25 attendees at one point, so it went very well.
Great. Awesome. Well, thank you all for joining us here. Hope you all have a good rest of your Friday and enjoy your weekend. And we will keep you posted here if the next time that we do another webinar. Thanks so much.
Thank you.
So long, everybody.
Bye-bye.
Bye.